Meme coin investors woke up this Monday to a full-blown bloodbath, as the speculative corner of the crypto market experienced sharp double-digit declines across nearly all major tokens, triggering panic among traders and prompting a wave of urgent questions. Is this a fleeting dip offering golden buying opportunities, or the start of a deeper, long-overdue correction? Ethereum-based Pepe led the carnage, plunging 12% to $0.00010, while SPX 6900 fell 11.55% to $1.40, and Fiatcoin dropped 8.99% to $1.13 in the past 24 hours alone. Amidst this widespread Red Sea, only a handful of coins Monero AB form, and Bitcoin SV posted minor gains under 1.5%, signaling that risk-off sentiment is dominating across the board. The context for this decline is deeply rooted in macroeconomic unease, as rising geopolitical tensions, most notably Israel's airstrikes on Iran, have sent traditional markets into a defensive crouch. The S&P 500 fell, while safe haven commodities like gold and oil surged, reinforcing the flight to safety narrative. This sentiment is spilled over into crypto markets, as Bitcoin dominance rose to 63.83%, a clear indication that investors are rotating out of speculative meme coins and into perceived safer digital assets like Bitcoin. When fear strikes traditional markets, investors move from stocks to commodities. In crypto, they go from meme coins to BTC. The technical structure of Pepe reinforces the bearish outlook, as the weekly chart shows clear distribution patterns forming just below the key 0.00, breaking critical support and now flirting with deeper downside. On-chain metrics confirm the bearish tone, while net flows spiked on June 6, with wallets controlling over 1% of the total supply, moving large volumes to centralized exchanges, typically a precursor to heavy selling. From a technical perspective, indicators are flashing warnings. The relative strength index is hovering around 40.5 on the weekly time, weakening momentum without being oversold, while the average directional index sits at 26, confirming a strengthening bearish trend. If the price breaks below the 0.0, it could trigger a wave of cascading liquidations, potentially dragging the coin toward the $0 region. Meanwhile, the 50-day EMA now serves as overhead resistance around 0.0, making any recovery attempt a steep uphill battle. SPX 6900, a meme coin that parodies the S&P 500, is facing its own correction after a euphoric rally that saw it skyrocket over 230% between May and June. Now sitting at $1.50, it is undergoing a textbook profit-taking pullback. The weekly chart shows consolidation within a symmetrical triangle, and the latest candle is testing the lower trend. Its RSI has dropped from overheated levels above 75 down to 69, ironically still in meme-worthy territory, while its DX at 26 suggests waning trend momentum. Critical support lies at $1.30, and a weekly close below that could confirm a breakdown, opening the door for a swift move toward $1.08, where the short-term EMA may offer a temporary floor. A bullish resurgence would require reclaiming resistance near $1.80. Fiatcoin's nearly 9% drop might appear less severe, but under the hood, its structure is just as fragile, currently trading at $1.13. This Solana-based token appears to be trapped in a descending channel on the daily timeframe. The last high on June 25 failed to reclaim May's $1.60 peak, suggesting that bullish momentum is fading fast. Its RSI sits at 37 on the weekly and 47 on the daily, both indicators leaning bearish, while the ADX reading of 17 shows weak trend strength, hinting that the coin is drifting in a low-energy consolidation phase vulnerable to further downside. Zooming out, the combined technical and sentiment picture paints a grim scenario for the meme coin sector. Whales are dumped, derivatives are unwinding, and price structures are deteriorating across the board. This sharp correction may be necessary after an unsustainable rally fueled more by hype than fundamentals. For seasoned contrarians, such environments occasionally present isometric opportunities, but meme coins are notoriously volatile, often burning through retail capital faster than any other asset class. Still, history teaches that market panic often transfers wealth from the impatient to the patient, but that logic rarely applies cleanly in a space where many tokens have lifespans shorter than most internet memes. Ultimately, Bitcoin's price trajectory and macro geopolitical developments will dictate whether this is a temporary dip or a full-scale collapse. If BTC can maintain levels above $100,000 and Middle East tensions de-escalate, the meme coin space might witness a relief rally, with exaggerated moves to the upside. But with Bitcoin dominance climbing and the altcoin season index languishing at extreme lows, the path of least resistance remains downward for now. For those considering entries, waiting for technical confirmation is essential. Pepe needs to reclaim $0.000, and Fiatcoin needs to break above $1.28 to even hint at forming a tradable bottom. Until those levels are secured, the so-called meme coin massacre may not be over, and more digital tombstones may soon be etched onto this speculative battlefield.